Hello and welcome to the Banker's July Data Bank video. I'm David Robinson, the online editor at The Banker, and today we're going to look at special purpose acquisition companies, SPACs, which have boomed over the last year, but it's a trend that may be slowing. With me to discuss this is Marie Kemplay, the investment banking and capital markets editor at The Banker. Marie, let's start with the basics. What are SPACs and how have they been driving IPO activity?
Yeah, so SPACs, or special purpose acquisition companies, which is what that stands for. These are companies that are often known as shell companies or blank check companies because they're essentially formed for one specific purpose, which is to raise capital, and then they use that capital in order to acquire another company. So the way it works is the SPAC will raise capital via an IPO, and it then has a period, normally 2 years, in order to find a company to acquire. And the company that it acquires in the process of that transaction, that company then becomes listed publicly. So investors at the time that they decide to invest in a SPAC won't know what company is going to be acquired, although the SPAC will often, indicate, okay, we're going to perhaps buy companies within the tech space, the biotech space. They'll have an idea of the sector, but they won't know exactly which company. And also, typically, SPACs will have high-profile sponsors to lend credibility to the deal. So, there's a whole list of people I could kind of reel off, but perhaps just one name to give you is Reid Hoffman, the co-founder of LinkedIn, is one prominent example of a well-known SPAC sponsor. As you've mentioned, there's been a bit of a boom in these in the last kind of year and a half. And it's hard, to be honest, to pinpoint why they've suddenly become so popular because, the structure, SPACs have actually been around since the 1990s. It's not a new phenomenon in that sense. But, perhaps there's a few different things to explain why they kind of took off kind of in the middle of last year. The conventional wisdom goes, for example, that it's a lot harder to go via a traditional IPO in order to become publicly listed than it is for a company to simply merge with a SPAC. And as is often discussed, there are a lot of fast-growing tech companies out there in particular, and for them, it may be a more attractive route to a public listing to merge with a SPAC, to be acquired by a SPAC, than it is for them to go via the traditional IPO route. And another thing that's probably worth mentioning is, that there is a lot of kind of capital out there. A lot of private equity investors and others do have a lot of capital sitting on their books. And, it only takes a few prominent examples of SPACs going well and investors getting a really good return on their investment to, maybe see the start of a trend. And I think what we saw last year was just, a few good examples of investors getting a good result, and that trend really took off. But as I say, let's kind of get to the meat of it. Last year there were 248 SPAC IPOs in the US, raising more than $80 billion US dollars, and that's according to Dealogic data. And that was actually the highest annual total on record. But very quickly, that record total was surpassed in the first quarter of this year, where we saw nearly 300 SPACs listing publicly. On the US markets, and they raised almost 100 billion US dollars. And that's, as I say, just in the first quarter of this year. But the boom, might already be over because just 3 months later, at the end of the second quarter of this year, the picture is very different. Only around 30 SPACs listed in the US in the second quarter of this year. So yeah, a very, very busy time, kind of late last year and early this year, but it's kind of tailed off, it seems, on the IPO side.
So the boom may be coming to an end. Why do you think that might be?
Yeah, there's a number of reasons. I think one of the most kind of often talked about is, since late last year, the Securities and Exchange Commission, the SEC, which is obviously one of the main regulators in the US capital markets, has been making noises to suggest that it's a bit concerned about this market, overheating, as well as also concerns about investors and being attracted into this market without fully understanding the risks and all these kind of things. And it kind of indicated that it was going to start probing this market and perhaps getting more involved in regulating it, etc. The decisive moment seems to have been in late March, when it was widely reported in the press that the SEC had actually opened an inquiry, a specific inquiry into the SPAC markets, which I think spooked a lot of people. And also, there's also a sense that, as I say, there were a lot of these SPACs coming onto the market, and investors also were starting to bulk at the valuations a little bit and being a bit more reticent to put funding in, suggesting again that the market was perhaps a bit oversaturated. But, almost overnight, I would say, between kind of March and April this year, the market really dried up. So according to Dealogic data, there were 109 SPAC IPOs in March this year in the US markets. And just 1 month later, there were 13. So, that's a massive deterioration month on month. And it's worth saying that March 2021 was actually the busiest month on record for SPAC IPOs. And there aren't any signs that the market has picked back up since April. There were 19 of those deals in May and then very few in June. So, yeah, there's no signs of it picking back up again. But it's worth mentioning, with SPACs, one of the interesting things, of course, is that, we can talk around the IPO side of the deal. But just as important is the other side of it. The SPACs have raised the capital. They then need to find companies to acquire. So although there might not be a massive wave of new SPAC IPOs coming onto the markets, there's still all that capital that was raised, late last year and early this year that needs to find companies to acquire. Depending on which data source you use, there are around 400 outstanding SPACs in the US that need to find companies to acquire, and between them they hold more than $100 billion in capital. So obviously that's a lot of money floating around the system there, and that's probably going to continue driving M&A activity for some time. Last year there were 90 M&A transactions within the US markets that were SPAC deals, and this year so far, and again we're only 6 months into the year, that's 120 SPAC-led M&A transactions. So as I say, it's looking likely that, at least on the M&A side, the market is going to continue to be busy, being driven by SPAC activity for some time to come.
Marie, can we briefly touch on Europe? There's been a lot of speculation about if or when the SPAC markets might take off in Europe. Are there signs that this is starting to happen?
Yeah, I think you're right to comment on that speculation. There has certainly been a lot of talk around, are the European SPAC markets ever going to take off? And it's definitely true that there really hasn't been the same flurry of activity on the European side of the Atlantic as there has been in the US markets. The market has never really taken off in Europe. But having said that, there are some signs that the European side might be starting to pick up a little bit. So there have been 18 SPAC deals this year on European exchanges, and between them they've raised around $5 billion US. Now that's the highest total on record for the European markets. But if we think back to the numbers I was talking about just a moment ago on in the US markets, that's still a pretty small total. But I think it's fair to say all the European exchanges, Amsterdam, Paris, Frankfurt, are really competing hard to kind of burnish their SPAC-friendly credentials. So, I would expect to see more of that activity happening. And also, it's worth mentioning for London as well. There was recently the review of UK listings rules, and part of that, one of the key things mentioned in that review was that London becoming more friendly to SPAC listings. The rules within the London Stock Exchange at the moment aren't set up in such a way that it makes it a particularly attractive venue for SPAC listings. So, yeah, there's a lot of stuff going on within Europe to try and make the exchanges more attractive for those kind of listings. But I think it's fair to say it's yet to be seen if Europe is really going to pick up the baton from the US in a meaningful way. Watch this space on that one.
Well, Marie, thank you. However this trend develops, the special purpose acquisition company space is one we continue following closely on The Banker.